Okay, so I know there are lots of people out there who want to start trading and are moving over to the future markets and have limited funds. All right, you are, maybe have only 500 bucks to start with, and you want to really start to day trade the future markets, in particular the indices. Okay, we're talking about the Nasdaq 100 futures or the E-mini S&P 500 or the micros. And let me say this for one, because this video is more so in showing beginner traders that have small accounts, okay, how they can take $500, for example, a limited amount of funds, and grow that. Now, we're not looking to withdraw any means of money. We're looking to deposit that money and grow it over time so that we can trade, trade maybe larger lot sizes or larger contract sizes over time. Okay, but you want to have a set amount of um, number of contracts you're going to trade. And starting off with the micros, I would definitely start with one or two contracts max with only $500. I mean, I would really just trade one, but I know people are kind of antsy and trying to make a little bit more money because with trading the micros, you're not going to be able to, unless you're trading large lot sizes, not going to be able to build an account up quickly, okay? Meaning just like overnight or within the first week or 2 weeks or 30 days. This is a recipe for growing a small account, micro account, all right, and being able in time to build that account. So, basically you just like depositing a little bit of money into, say, for example, your checking or savings account, and you want to watch it, well, say savings account, not checking, but savings account that has a high APY, and you're looking to watch it grow over time. The same thing here. You're looking to take a small account. You're not ready to maybe get into the markets full time. You just want to be able to make some extra money, but in time be able to withdraw as well. So let's talk about taking $500, trading the future markets, and I'm going to show you the recipe and what you can do to watch it, to see it grow. All right, all surrounding supply and demand. So if you're a beginner and you're watching this video, please stay tuned because I'm getting ready to get into it right now and showing you a few setups. But the most important ingredient to the recipe is always understanding the structure of the market. Are we moving higher, breaking structure, meaning making higher highs and higher lows? Or are we moving to the downside, trending and making lower lows and lower highs? You have to understand that the market can reverse at any given time and what to look for. If you notice that the market is shifting around, to kind of change your mindset on which direction to trade. Okay, so let's say you got $500. What should you do? Okay, well, what I would do to recommend, and those that have been following the channel and have found success, and what I've been showing over many years and many videos, I am so glad to see you guys in a comfortable position now to where you're making money and profiting because you spent time on the charts doing your homework. That means back testing, forward testing the strategy, and finding a niche or finding a way to make it work for you. Okay, I show you example after example here on this channel about breakdowns of trades that I post over on the Discord, as well as just go into depth for free, pretty much, the strategy and how it works. So I'm going to show you a few examples here. This being a demand zone here, this being a supply zone here, and I didn't mark this one up for some reason, but this being a supply area over here. Going to show you a few examples right now. So first, what you see, this is a E-mini chart. Okay, just look at it and think about it as if it was a micro, okay, chart. It doesn't really matter. I'm just showing you examples here because same thing you're going to see even on the micros. So just imagine this was the micro chart, okay? So what you want to do is first find out which direction we're moving. Moving to the upside, making higher highs and higher lows and breaking structure, meaning a push up here, low, breaking structure, continue push, breaking back, breaking structure above these areas here. And then, we're just making higher highs and higher lows. And as long as we're doing that, then we are moving in a direction in which we should take our trades going long. So moving into the 15th to the 16th, we had a high here. The market pulls back and breaks structure to the upside right here, breaking above this area here at 19,683, leaving behind a beautiful area of demand resting right here. Okay, now what you always want to do, first and foremost, is size up the market. That meaning if there is a leg to where you broke structure to the upside, look and measure which areas make sense. Do you want to take a trade halfway into a move on a pullback, or closer to the origination point where the market started making its move, where it pushed up and broke structure? Logical sense means you want to find an area of demand resting back at the origination point, as close, a clean area of demand where there's a gap resting at, meaning the market has not tested it yet. Why? Because that raises the interest and the stakes of the market moving in our direction when we're looking to go long, because the market hasn't tested it yet. It's an unmitigated zone. So when the market comes back here, you're going to see these two boxes right here. The first bigger box is the 120 range demand zone that I marked up. That smaller box, we're going to move down to the lower time frame, the 24 range entry chart, in which I look to take trades from. That helps us getting to a better entry point, more precise, and getting into a trade. Okay, so this is using chart confluence. Higher base chart or markup of a demand zone first, and then moving down to a lower base chart and looking for a demand zone pretty much within that higher base zone chart from the 120 range chart. Okay, hopefully that makes sense. But we always want to identify the structure of the market, meaning in the direction. Breaking higher, breaking structure, pull back to area of demand. Now, if you notice here, I'm not interested in taking a trade right here at the upper end of a leg here. This is going to put me above the 50% area. I want to be back down where the move started at, where the move started to move higher and break this area of structure. The first area and where there's a clearly identified demand zone where there is a gap resting at is going to be this demand zone here in this bigger box. Now, this did not pull back to that zone until around, say, for example, 4 o'clock, 4:10, 4:15 on the 19th of August. Okay, but this is during London session. So if we trade London session, this would have been a great opportunity. And I'm going to throw this out there right now. If you're trading the indices, I would recommend anyone trading the indices, please focus on either the London or the New York session. That's where most of your volume is going to come from. Trading the indices during the New York session, not New York session, but the Asian session can be quite tricky. Why? Because there's not quite enough volume there. All right. Now, if you're interested in trading the Asian session, I would focus in on some means of a commodity like gold, or some other market, maybe oil or something like that, or some metal, metal, or maybe the currencies. I'm not sure, but definitely some of the commodity markets. But anyways, we're talking about the index market here. This is London session. There is a demand zone resting here. And, I'm not going to trade this session here because I'm not up. But if you are trading during the London session, okay, 3, 4 o'clock time frame, 5 o'clock time frame, this would have been a beautiful setup to take. Higher time frame, 120 range, demand zone. Now we'll move down to the 24 range and look for the setup. All right, so this is what the 24 range chart looks like. Yes, it looks noisy, it looks choppy, but all we're interested in is finding our higher base zone, that 120 range zone, which is right here, and just identifying to see within that zone, is there a possibility, or is there a lower time frame, meaning the 24 range demand zone that's developed. All right, the bigger box, the 120 range demand zone we just marked off. The smaller box that we have here. Okay, let's blow this up and see. All right, I'm blowing this up. The market retraces back to it. There is a demand zone resting within the larger box here, which is that 120 range demand zone. So when we see that there, the next thing is to do, okay, if we get rejection, I'm not immediately jumping into a trade once the market taps into that lower base zone. I want to see, is there going to be a break and close of a candle to the upside once we basically tapped into the zone? All right, so let's do this. So the market taps into the zone, pushes a little lower. See that last red bearish candle right here to the downside? We're looking for a break and close above. So around about 19,537.5. That would be pretty much the entry point, unless you're getting in aggressive. But I don't get in aggressive unless you know what you're doing. And then so we're looking to say, okay, where do I place my stop at? I would definitely place my stop on the back end, off the rejection from the 24 range chart where we got the break and close of the candle. That's the rejection point. So we're talking about somewhere around 19,527. All right. And maybe a few points behind that, because you want to give yourself some room, because lots of times they'll push up a little bit just to come back and test this area, because they know people are probably going to get, buyers are going to get to that trade. So stop resting somewhere in this area here. Okay. Entry point is going to be right here around 537. Okay. And at that point there, we're looking to see where we can take the trade to. Typically what I do is I'll go back to my higher time frame and look, this is the area here. I'm looking to see if there is gaps to be filled to the upside, or is there a supply area in which maybe the market could stop or rest at. Yes, this is a little swing right here, but I don't really consider this a structure, meaning a breaker structure pretty much, okay? Because what I like to see clearly when it comes to breaker structures is something like this right here, where the market is either made a beautiful, say, like an A formation, all right, okay, and then break structure to the upside, okay, meaning it's, let me, give me 1 second right quick. Why is it doing that? Let me do away with this. All right. Okay, so where the market pulls back, so we got a length of a leg, pull back, close to measurement of, the same move to the upside, and then the market breaks higher. That's going to basically a breaker structure right there, okay? So it makes a close look to what would be like an A formation or A shape, okay, like the letter A. So right here, I mean, you see the market push down here, and it really doesn't pull back just a little bit before breaking lower. Now, this move, where it moved lower here, it broke structure lower, breaking below this area here. So this was a beautiful A-shaped formation to the upside. Push hard to the upside, nice pullback, and then push up. And then we got the break below this area when it pushed lower. So this would be a demand zone. So a few things. We have gaps resting right here, and we have this demand, if I said demand, I'm sorry, guys, supply. The supply area right here. So I would be interested in aiming for the market to come back and fill this gap right here back up to this area of supply, and maybe possibly this area up here where there's liquidity resting at above this high right here. And as you can see here, so if we get in at 37 somewhere down here, just on the higher time frame chart, we can look for to take a trade up to around right here, say for example, to maybe 632, or possibly up here to 655 and higher. So what I like to do is first, maybe most times is I'm looking for a minimum of 20 points on the NASDAQ, okay, 100 futures. So 20 points, if you trade with 2 contracts, take out maybe at the 20 point mark or 25 point mark, somewhere in between that area there, and then allow to leave a runner. That's something I'm working on myself, because just, sometimes what you'll see, not say sometimes, but a lot of times you will leave a lot on the table, meaning profits, if you just close your position right on out, okay? So this was a breaker structure to the downside when it broke below here, and we have liquidity resting right here, and we have areas where gaps need to be filled at. So these are strong areas in which I can focus in on the gaps and this area of supply resting right here. And if you got in around 37, as you can see, at 537 and took the market back up to fill this gap here, I mean, that was over 100-point move right there. So trying to catch 2025 on the first contract and then maybe another 2025 on the second contract, man, you're up a lot of points there, right? So you're up over 50 points. Okay, so especially on that last contract. So let's talk about it in terms of if we only have $500. Okay, so if we only have $500 and we made a trade like this, all right, so here we go, starting with $500. Okay, trading maybe no more than maybe say 2 contracts. All right, I would really, me personally, only trade 1 contract. Because I don't want to put on a risk as much, all right? Because then what is that? If you're risking 2 contracts on $500, that's a little bit less than somewhere between 16 and 17% of your account size. I wouldn't recommend doing that. I personally would recommend staying under 10%. But I'm not gonna tell anyone what to do. But just say, for example, if you had $500 and you want to trade 2 contracts, and $500 is not a lot of money. So if you know what you're doing and you're taking the right type of setups at the right zone locations, and you're willing to risk a little more. So let's say you got 2 contracts in, picked up a 20-point move, say for example, all right, times 4 ticks in that particular on the NASDAQ 100, that's 80 ticks. The tick size is only going to be 50 cents per tick on the micros. Okay, we're talking about trading the micros, so that's $40 a contract times 2 contracts. That's going to give you $80 on a 20-point move. And of course, if you trade a little bit more than that and pick up, say for example, let's say if you pick up 25 points times 25 points times 4, that's going to give us 100 ticks, okay? Times 0.5, all right, that's $50 a tick times 2. That's going to give us $100 on those 2 contracts right there, okay? So you've taken at that point, they were only picking up 25 points. You picked up an additional $100 on that small little trade. They were trading the micro. So now your accounts went from $500 to $600. And if you do that twice a day, then you're picking up, another $100. So you watch your account grow from $500 to $700. You can do this on a daily and to watch your account grow slowly every single day. So if you picked up an additional $200 a day trading the micros, say for example with 2 contracts, then every single day from say Monday through Friday, that's going to be an additional $1,000 a week. Okay. And that's how you build up and compound a account using this strategy here. Multi-chart confluence. We're looking for the highest probability zones. Okay. All right. When it comes to a move where the market broke structure to the upside off the 120 range, I'll mark my first zone. Okay. But I'm looking, you got to think logical. Just as I said, which areas make sense to mark these demand zones. I don't want to be trading at the upper end where the move pretty much broke structure to the upside. I want to find if there's areas or gaps below, meaning where there's demand resting at, I'd rather wait for the market to pull back to those key areas below me because they make more sense because this is where the move started at. Okay. And this was the first demand zone that was left untapped or untested after the break of structure back to the downside right here. That makes sense. Okay. So doing this with a small size $500 account, you can compound and build that account up to where over time you can start trading the E-minis. All right. And then you start to really capitalize on the growth of your account, watching it grow quicker because now you're taking it 10 times fold the amount of profit you can make trading the from the micros to trading the E-mini. Now, next example here. This is a supply setup right here, okay? I'm going to talk about this. I did this in another video, but I want to stress this again because, there was talk to this, say, for example, on the Discord, and someone said they were interested or had taken this trade right here going short. And I'm questioning, like, why would you take this trade going short? Yeah, we got a break of structure lower here, okay? But was this where the move started from the upside? And are there areas that need to be filled to the upside? You got to understand the market has to mirror itself, and the market is going to fill these gaps in. I don't want to take the risk, a higher risk, taking a trade down here, where there's at a lower at a low, okay, all right, versus up here. This is where the move started at. It makes more sense to take the trade where it started at and started breaking structure, where there's a clean supply zone resting right here versus taking this supply zone here. That doesn't make any sense. Again, I showed this with the fib before. If you look at the move to the downside before it started pulling back, you're way down here and it hadn't even tapped into the 50% area. It's down here at 38.2%. I don't trade fibs. I'm just here to show you we're looking at extensions of legs or retracements off of legs to the downside to determine like which makes more logical sense. You got to think in terms of common sense when it comes to this trading stuff, because if not, then you're going to end up taking a bad trade, and that bad trade is going to cost you money. So for me, I'm way more interested in taking a trade up here than down here. Why? Yeah, we got a push to the upside, pull back, broke structure. Market turns back around, starts taking out some minor areas of structure to the downside right here, right? And then it makes a low, lower high, and it makes another low here where it broke structure below this low here at 19,800. But I'm not taking a trade right here knowing I got gaps resting above me. Definitely areas where the market's going to want to test. It's going to fill those areas in. This makes more sense right here. So I have this beautiful supply area marked up right here off the 120 range chart. Move down to the 24 range chart. And now in the 24 range chart, as you can see here, the bigger box, what is that? That's the 120 range supply zone. And then we have a beautiful supply zone on the 24 range chart that's inside, say, for example, the 120 range chart. So 2 chart confluences of areas of supply. Let me blow this up a little bit so you can see it. You see it right here. This is a unmitigated. I blow up a little more because I know it's probably hard to see. This is a unmitigated, okay, untapped, fresh supply zone off the 24 range chart within the 120 range supply zone. All right, so we go back over to it. Once it taps into it, normally we're looking, not normally, but we're looking for the break and close of the candle. Now, this type of stuff right here happens from time to time, and it will happen. So you have to understand, and it's frustrating because sometimes what they'll do is you get into a trade at the break and close of the candle, say below here at 19,943, or say 943 or 942, and then the market comes back. Normally we're placing a stop around the back end, say 19,950 or 952, give or take a few points above. Yep, the market comes back there and they test. This is what I was talking about. They love to test your area of where your stops are resident. They know where traders are putting, especially retail traders are putting their stops at. And this happens where you'll get stopped out and you have to know and probably place another trade, okay? It happens to me, happens to the best sometimes, and it doesn't really, matter. But for me, my stop is not going to be resting like 2 or 3 points above this area. I normally give myself a lot more room, a breathing room. I mean, several points. Okay, so they would have never tested my stop right there because I would have had it sitting up above, maybe 6, 7 points above this area here, because I know they love the test within between 1 to 2, 3 points above an area right here. Okay, that's the rejection point. So give yourself some breathing room there. But anyways, the market comes down here, all right, and then it breaks, pulls back, and then it pushes lower. They're testing to see what people's stops are to grab liquidity to keep pushing lower, all right? So in this case here, once it did what it did on the pullback right here, you could either re-enter or stay out of the trade. If you re-entered, you want to be looking to take the break somewhere below 942 to get into the trade. And what are we aiming for? We'll go back to the higher base chart, the 120 range chart. This is the area right here. Look below you, and there is a demand zone resting right here. Breaker structure to the upside, fresh or untapped demand area that I would be interested in taking my trade back down to. Small gap to fill as well, 19,909. Go back to the 24 range, and as you can see, the market just melted to the downside until it got to, actually melted lower than that. I think, let's see, 834. Yeah, it came on down to like 19,831. So it definitely, you're talking about picking up. Let's see. So we got in, what did I say? For example, 42, I believe it was 42 area, take it down to 909. I mean, that is definitely a good pickup right there of 33 points. Okay. You could have got a 30-point move, taking it back down to that supply area off the higher base chart. And get a trade there. Okay. That'd have been a great stopping point to get out of the market right there. Again, picking up a few $100 right there on that one trade. All right. If we trade the micro. So let's say we're picking up 30 points on that trade there. So that's 30. I'll bring this over times 4. That's 120 ticks. There's 50 cents per tick on it. Okay. We got 2 contracts in. That's $120 would have picked up on that one trade right there. Okay. And then if we got back in and picked up, another, say 20 points, whatever the case is, to pick up another $80, that would gave us $200 on the day. All right. So you could do this picking up $200 a day, 5 days a week to grow your $500 account. So within the first week, you can grow it from $500 to $1,000. I mean, to $1,500, which means that you have profited $1,000 gross minus your commissions, of course. But again, taking it from $500 and watching it grow, picking up $1,000, watching it grow to $1,500 in 1 week. You do that week after week, you're up a few $1,000s on that small $500 trading account. Just trade the micros. It can be definitely done, but it all boils down to logic. Okay, taking trades at the right and the most high probability areas, just using common sense and knowing where to take these trades from. Again, I'm not interested in taking this trade right here. We're too low. Okay, the move started way up here. Why would I want to take the trade down here knowing that we got gaps to fill and this supply area is resting right above us? That makes sense. Same thing down here. All right, you notice here, broke to the upside, structure break above this area here at 19,683. Why would I want to take a trade up here? I ought to be more interested in taking it down here where the move started at, where there's a clean, fresh demand zone. Common sense, guys. All right. But outside of that, that's really all I want to show you guys today, was really how to take a $500 small account and grow it. To all the beginners out there that are switching over or want to trade futures, it's a great strategy to be able to trade. Look, I have tons and tons of videos to where I walk through trade setups that I posted over on our Discord community. Yes, trades that I posted over in our Discord community, and I have it's a private community, and there are lots of members who are part of that private community, and they have a lot of them are successful now. They passed challenges. They're taking withdrawals. For example, some of these people don't want to be, they don't want to put their information out there. They're more private or whatever the case is. And some have put their information out there, letting the community know that, strategy works. And I really commend all you guys that are really putting the homework in and profitable to today. Those that have past challenges and put funds into a personal or a trading account, I commend you guys, and really I want to see you, continue to take withdrawals from the market. Okay, this could be a business, and lots of people have turned this into a business. But what I'm getting at here is a private community for $6.99 for all those that want the trade breakdowns and a deeper understanding of the strategy as a whole. For $6.99, I'll walk you through setup after setup after setup on multiple videos of trades I've taken so that you understand where to place stop losses, where to take profit at, walking you through the mindset of what I was thinking leading up to a trade and why I took that trade. It helps, really, you're digging deep into these trade setups to understand why I'm taking them. I'm not telling anyone that, hey, it's your choice to make. But for $6.99, I would definitely invest my pennies on a dollar into that, especially if, I back tested and seen that this strategy works, and I want to really dig a little bit deeper to understand it. But again, that's up to you. If you're interested, the link to become an elite member, to gain access to those trade breakdowns, to gain access to the video playlist, to gain access to relative and important content. Like I posted a video covering a great breakdown or in detail video about market structure. Market structure is king. Understand that it's important. I did that. That is one of the videos that is part of the elite membership, which is that private community. Again, for $6.99. That link is down in the description portion of the video. You'll see it right below the Discord link. It says become an elite member. Once you click that link, 2 tiers will pop up. Make sure to choose the one for $6.99, and it will give you direct access to those videos. All right. But outside of that, I appreciate everyone who watches the videos on a daily basis. I'm just here to kind of really help individuals along and inspire those that are really interested in trading the future markets. And if you found value in today's video, please do me the biggest favor and drop a like on the video. Take care. See everyone in the next one.